100k, day 5. ETH is roaring, Bitcoin is coiling. What comes next? Just like we said, Bitcoin keeps pushing through 100k, and Ethereum is finally showing that strong rebound we were expecting weeks ago. If you've been watching the channel, you will remember back on April 10. I talked about Ethereum's tendency to rally hard when sentiment shifts. Historically, when ETH Bitcoin ratio hits these lows, it's often followed by strong rallies in Ethereum's price. For example, in March 2021, when the ratio dropped to 0.030, Ethereum surged by 140% within 2 months. In June 2022, a similar drop to 0.050 was followed by a rally of over 70%. Then, just last week, on May 7th, I said this: unless we see strong sell-side volume appear between 98k and 100k, the path of least resistance remains to the upside. You can find the links below in the description. And sure enough, here we are. Bitcoin has broken through 100k and Ethereum is catching up fast. So, what's fueling this move? A US-China trade deal just hit headlines. Wall Street is scaling into Bitcoin through ETFs. And whales? They are not just buying, they are positioning for something much bigger. Hey everyone, I'm Neil, welcome back to the channel. If you're new here, this is where we break down the crypto market with real data, clean charts, and no hype. In today's video, we are breaking down institutional accumulation, whale behavior, and what the heat map is telling us right now. Stick around, because this move is just getting started. Let's start with the big macro story. Over the weekend, the US and China finally reached a major trade agreement. A joint statement is scheduled for release on May 12th, and it's already being called a turning point for the global economy. Markets are already front-running this. Bitcoin and Ethereum both surged over the weekend. Bitcoin touched just 4% off all-time highs, while ETH rallied nearly 40%, 36.2% precisely, in just a few days. We are also seeing the Trump administration go all in on crypto. Vice President JD Vance is now confirmed as a featured speaker at Bitcoin 2025 in Las Vegas, the world's largest Bitcoin gathering. He will be the first sitting US vice president in history to publicly back Bitcoin on a stage like this. That's not just a headline, that's a signal. And we are not done. This week we've got major macro events. On Tuesday, the CPI, Consumer Price Index report, will be released. On Thursday, PPI, retail sales, initial jobless claims, and, most importantly, Powell's speech. If those land dovish, momentum could rip even harder. But, as good as all this sounds for markets, we should still expect some serious volatility. So, stay sharp, not euphoric. Let's talk data. Mike Saylor reports that Strategy added to its Bitcoin buying last week as well. We will announce later how many were purchased and what the average unit price was. So, stay tuned. Also, as I mentioned multiple times in my previous video, Strike launched its fund with 42,000 Bitcoin, and BlackRock's IBIT now holds more than 620,000 Bitcoin, new all-time high for both. The influx of whales and institutional players has increased a lot. Take the investment bank Goldman Sachs. They have boosted their stake in BlackRock's iShares Bitcoin Trust, the IBIT, by 28%. Now holding 30.8 million shares valued at over $1.4 billion. This positions Goldman Sachs as the largest institutional holder of IBIT shares. This is Wall Street doubling down on Bitcoin. Now, let's zoom out and talk a big picture, because what we are seeing right now on-chain is major. This chart tracks about 10 key indicators from CryptoQuants, and each one tells us whether we are in a bull market or a bear market. A few weeks ago, it was mostly red. 9 out of 10 signals were bearish. Only technical momentum was pointing higher. But that's flipped. Now we are seeing 8 out of 10 indicators flashing green and only 2 still showing bear market behavior. So, what are those 2? One is the Network Activity Index, which tracks how much on-chain activity is picking up, think user growth, address creation, and transaction volume. The other is the Exchange Flow Pulse, which looks at how much Bitcoin is flowing onto or off of exchanges. Those two haven't fully flipped yet, but once they do, that's often when the strongest part of the rally kicks in. And if you look at past cycles, the exact same setup happened twice last year. Green across the board, then a big leg higher. Right now, we are not overheated, we are in transition. The trend is up. The structure is healthy. And this shift on-chain is one of the strongest signals we have seen in months. Now, let's take a look at the CVD indicator and whale activity. We can see strong sell walls forming around 105k and 106k. That's where the resistance is stacking up right now. But here's what's happening underneath. And it's all in the whales movements. Let's start with the 1 million, 10 million cohort, the mega whales, shown by the brown line. This group has come alive and sharply. They are not just quietly accumulating anymore, they are aggressively buying into this move, even as the price hovers just under 106k. Then we've got the large whales, those placing 100k to 1 million orders. That's the purple line. They have flipped back to net buyers, scaling in right alongside the mega whales. This shows that institutional confidence is building again around the 100k breakout zone. Mid-sized whales, the 10k to 100k range in green, have been steadily accumulating throughout the past week. They were early to this move and they are still adding. Now, compare that to retail. The red line, 1k, 10k, is mostly flat. And the orange line, $100 to 1k, is still trending lower. So retail, still on the sidelines, either profit-taking or waiting for confirmation. This isn't a retail-led move. It's being driven by larger players. And the blue line, which tracks all orders, confirms that. It's climbing, but it's being pulled up by the whales, not leveraged speculation. The buying is real, it's calculated, and it's institutional. Let's take a look at what's happening on the heat map and how the price has evolved over the last 24 hours. Bitcoin has been ranging between 100.5k and 105k, building pressure. We saw price tap 105k multiple times, and each time it ran into the same thing, a thick sell wall clearly visible as dense yellow and green bands on the heat map. Well, that's been the top of the range, and it's been holding so far. But interestingly, it's starting to weaken. Meanwhile, on the downside, the 103.5k to 103.7k zone has been acting as solid support. It's already absorbed multiple dips, including one clean bounce just hours ago. Buyers stepped in right at that level and price rebounded. Right now, we are back in the middle of that range, around 104k, where price is consolidating. Price is trapped in a high congestion range, with strong resistance at 105k, lighter resistance up to 106k, and solid support between 103k and 103.5k. Both sides of the range are stacked with leverage. Buyers waiting to defend below and sellers waiting to fade above. This is a classic liquidity box, and we are right in the middle of it now. Key zones based on heatmap. Resistance, 105k to 106k. It's the thickest sell wall. It has been rejected twice already. For the support, 103k to 103.5k. It's the strong bid zone defended multiple times. The breakout targets, if we clear 106k, price could spike quickly toward 108k or even 109k. If 103k breaks down, watch for a move toward 101.8k, maybe even 100k flat on a deeper flush. Final takeaway, the price is compressing between 103k and 105k, and both sides are building up pressure. We have already seen one breakout attempt rejected at the top, but the range is still holding. If bulls can break through 105k with volume, we will likely see another liquidation cascade higher. If bears crack the 103k floor, long liquidations could take over fast. This box won't last forever. The next move is going to be sharp. So, here's where things stand right now. The US and China just struck a major trade deal, institutions are scaling back into Bitcoin, whales are buying, and the charts, they are showing strength, not exhaustion. If this momentum holds, we could see Bitcoin push toward 110k, 120k, even 130k in the coming weeks. And if that short squeeze scenario we've been watching actually plays out, then yeah, 160k isn't just possible, it is in the conversation. Let me know what you think in the comments. Are we headed for 110k this week? Or do we need one more shakeout first? Smash that like button, hit subscribe for more macro crypto updates, and I will see you in the next one.